Let's send it back over to Scott Wapner, joining us with a panel of all-star investors. Help us navigate what might be next for the market, Scott.
All right, Carl, thank you so much. Back with Josh and Adam and Courtney and Tom Lee. And we talked earlier, Tom, we kept it broad. We looked at the backdrop for this record-setting rally. Now let's talk about positioning, exactly where our viewers want to think about investing, no matter who wins. How can we talk about that without addressing tech? The trade of the year. You've been a big proponent of the Mag 7, obviously. What's your view now?
I think tech still works into year end, but with the election behind us, I do think investors are going to be looking for other areas on a bet that market breadth is expanding. And I think one place they'll turn to is, oh, well, where would animal spirits come back? Things that could benefit from mergers, or where are multiples low so I can see PE expansion. And that would take people to small caps, financials, basically the rest of the market, actually.
That is, Courtney, where you do have Wolf Research talking about tonight, financials being a big election winner, talking about the regional banks as well. Do you see that as a space if former President Trump is reelected tonight as president once again, that is a space to keep your eye on?
Yeah, regional banks specifically are one that are talked about often right now, because what you're seeing is in this administration, though they really haven't turned down a lot of M&A, it's so hard to get these through that there's pretty much no M&A activity, but that is expected to pick up in a Trump administration. So absolutely, that's something that you want to look at. If Trump were to be in office, that's probably going to start to take off here.
So on the idea, Adam, of tech, I want to read you something that the Wedbush analyst Dan Ives, familiar to all of our viewers, of course, on the possibility of a Trump win and what that would mean for that space. A major change in tariffs, he says, and a harsher stance on China, we believe, would significantly impact the supply chain. Nvidia, Beijing, retaliatory impacts on Apple and Tesla are likely and slow the pace of the AI revolution. Is he onto something or not?
Look, I think investors are positioned in 5 or 6 growth themes independent of the election. AI semis is one of them. If he's talking about some short-term supply disruption, he could be right. But I think if you're investing money, you want to own compute and anything associated with it. You want to own software around that. There's electrification industrials, there's housing building materials, there's power. There's so many themes that are in place, and I think people are positioned to own those themes. I'd also say within tech, there's a little bit of this misnomer. Because the market cap of big tech is so big, you have to own it to keep up with the S&P. But if you look at the dispersion in the group, I mean, there's tons of stocks that are up or down a lot this year. It's Palantir's up 198, Dell's up 75, FICO's up 73, GoDaddy 50. I mean, there's tons of dispersion. Intel's down 55. You could have picked stock this year pretty well. It wasn't just the Mag 7 that worked. I think it's a little bit of an excuse because it's hard to beat the S&P when they're so big. But I think stock pickers had a very good year in tech.
The latest buzz in the stock market revolves around the fascinating and rapidly evolving world of artificial intelligence, with a particular focus on a household name, Nvidia. As one of the most iconic figures in tech innovation today, Nvidia has been at the forefront of an AI renaissance. The company captures global attention with its stunning astronomical growth and the sheer anticipation surrounding its upcoming financial disclosures. Across boardrooms and social media platforms, conversations abound as everyone speculates whether Nvidia can sustain its high-flying trajectory and keep its leadership position secure. This speculation is fueled by Nvidia's roots in groundbreaking graphics processing units, which have uniquely positioned it as a frontrunner in both AI and cloud computing. It draws significant attention from major industry players like Microsoft, Amazon, and Meta. With stakes higher than ever and the potential for massive shifts on the horizon, the market is collectively holding its breath for Nvidia's next quarterly performance report, set to drop in a matter of weeks. Investors and analysts alike are eagerly awaiting the results to determine if Nvidia will continue its remarkable ascent or if we are on the brink of witnessing a pivotal shift in the AI landscape. Such a shift has the potential to redefine the boundaries of technology and investment dramatically. The implications of either scenario are vast and will resonate throughout the industry, impacting strategic directions and investment strategies for years to come, possibly altering the fabric of this high-stakes market forever. Welcome back, everyone, to Investocracy.
Well, Scott, we're cautious, but we advised our clients to be buying the dips. And the reason we're cautious is that I'm probably saying something very obvious, but I think investors want to see who ends up becoming president after Election Day. So I think we are in a period where markets are just sitting on the sidelines, but at the same time, 2024 has been such a strong year, Scott, that I think the last 2 weeks have proven that maybe macro is taking a little bit of a step back now, and liquidity and all this cash on the sidelines is really the dominant factor.
You think we just have to get the election out of the way, and then it sort of clears the way for what you still think can be a pretty decent rally? I think your target's 6,000 or around that.
Yeah, Scott, there's a lot of firepower supporting stocks post-election because we've got a Fed that's dovish and the economy looks healthy. I don't think we're in a recession. And so, the 3-month and 6-month outlooks are very strong for stocks. And I think China, while there's maybe some hesitation, but China's government is really starting to unleash some measures, and that's supportive of that region finally turning. And of course, the third factor is, I think after 2 years, investors who've been very cautious are starting to realize that, the $6 trillion of cash on the sidelines and the low levels of margin debt need to be put to work at a time when the Fed is supporting the economy.
Standing on the precipice of technological innovation, Nvidia's incredible and stellar journey in the industry sparks both admiration and curiosity. Its rise as the beacon for generative AI developments is no accident. Their GPUs have become indispensable tools in the tech ecosystem, powering everything from cutting-edge scientific simulations to sophisticated machine learning algorithms. This technological prowess has not only reshaped industries but also redefined the capabilities of computational power as we know it. Everyone from Microsoft to Meta is investing heavily in their cloud infrastructures and AI advancements, showcasing that Nvidia's products are more than just components. They are the cornerstone of AI evolution and transformation. They form the bedrock upon which the next wave of digital transformation and intelligent system designs rests. The technology world has humor too, as a common joke in stock market circles goes, "Why don't investors do trigonometry? Because they avoid too many sine waves." This humor reflects Nvidia's trajectory, which, although generally ascending, hasn't always been linear. The recent tweets from analysts and investors alike echo sentiments of excitement peppered with skepticism. Watching Nvidia's rise is like sitting on a roller coaster that only goes up, hopefully. This sentiment captures both the thrill and unpredictability that come with the territory of such cutting-edge technology advancements. It highlights a pivotal aspect of the market. Volatility and risk are ever present, yet the rewards for those who invest wisely have so far been extraordinary. The journey is emblematic of innovation and risk, symbolizing both extreme highs and cautionary tales of market dynamics. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
At least as people, refer to them, valuations, they say, are too rich or stretched, right? The S&P is about 21.5. That's above, obviously, its historical average. Yields are up. Now, you could make the argument that they're up for the right reason, but I think they're still up a little bit more than people thought they might be after the Fed did its 50. And then if the Fed's going to be a little bit slower and smaller in the way they progress with rate cuts, is that an issue? Of course, the flip side of that is, well, why would they need to do anything anymore anyway? Because the economy is as resilient as you just suggested it is.
Yeah. Well, on all those points, Scott, on valuation, I know people use the aggregate number for the S&P, but it is misleading because, as we know, the top 7 stocks do have a higher deserve multiple, and the median PE, it's not that much cheaper, but it's around 18 times. But that's not a bad deal considering the 10-year yield is actually a 25 PE. And with regard to the Fed cuts possibly slowing, I think what really matters now is the Fed is on a path to essentially normalize interest rates back towards neutral because the inflation pressures are ebbing. I mean, I think even CPI this week, even though it was a little hotter than expected, really didn't send the signal that inflation's reaccelerating. And so the Fed is, on a path towards 3%. And I think that's really constructive for stocks.
Examining the specifics, Microsoft's massive $20 billion capital expenditure effort is largely focused on AI, mirroring Amazon's $75 billion annual capex effort to advance technological infrastructures. Such immense financial commitments underscore these corporations' unwavering confidence in Nvidia's technology as a crucial lever for growth and innovation within the competitive tech landscape. Similarly, Alphabet and Meta follow suit with significant investments, outlining a clear and compelling narrative. These tech titans see and trust Nvidia as a linchpin, a central figure in their AI futures and strategies. However, the market's pressing question remains: how long can this unprecedented growth spurt last? Nvidia has attempted to moderate expectations publicly, despite suggesting an admirable 79% increase in revenue growth. Their caution signifies not just a realistic stance, but also an understanding of their vast ecosystem and market dynamics. The company's historical volatility adds a layer of complexity, prompting some investors to be wary and proceed with caution. Yet, the ever-evolving foundational AI demands that Nvidia adeptly meets continue to promise opportunities and potential even amidst these uncertainties, thrilling investors and tech enthusiasts alike. It's an era marked by rapid advancements and profound possibilities, a time when strategies must be as agile as the technologies they aim to harness. With myriad possibilities on the horizon, the potential for innovative breakthroughs remains boundless, inviting stakeholders to navigate this vibrant and transformative landscape with wisdom and courage. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I think it's part of the formula because, bull markets are supported by strong fundamentals, and this is a case where not only has the economy survived extremely high interest rates, but the Fed is beginning to cut rates. And an economy that has sort of been languishing has been China, and now we have some stimulus and what looks like some bazooka policies that is supporting that region, and we have a lot of cash on the sidelines. So I think that this is a formula for stocks to do pretty well the next 3 to 12 months, and that's why we think that we would be well beyond 5,700 before year end.
Nvidia stands poised at the forefront of an impending AI revolution, offering a compelling case for long-term investment that cannot be overlooked. As tectonic shifts in technology continue, the continual surge in AI-related capital expenditures by tech giants assures Nvidia's vital and foundational role within this ecosystem remains unshaken. With the stock currently positioned attractively at about 32 times next year's earnings, it presents a remarkable opportunity for discerning investors looking beyond transient market fluctuations to find sustainable growth. Considering the mammoth capital inflow and Nvidia's robust existing customer base, the upcoming financial report might significantly reinforce its bullish stance and enhance its market position. Analysts strongly suggest that embracing Nvidia's stocks over several years could yield substantial returns that few other investments may rival in this space. As the countdown to November 20th approaches with a crescendo of interest and expectation, one is prompted to ponder: will you seize the opportunity and leverage this technological surge, or play spectator to what's being hailed as the defining growth narrative of our era? Share your thoughts on Nvidia's impressive momentum and its profound implications on the AI frontier in the comments below. Let's discuss the future shaped by an industry so integral to our technological evolution, an era that beckons us to not only observe, but participate actively in the unfolding saga of innovation. Indeed, the journey ahead promises to be as riveting as the technologies set to transform our world, presenting a unique moment for reflection and strategic decision-making in the rapidly evolving tech landscape. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there!